Hello traders, this is Dion. Welcome to my channel. So in this video I want to show you the simple things that a lot of traders miss when they are dealing with the daily bias. These are things that I've come to notice a lot when I'm trying to mentor a lot of new students. Okay, so we'll just get right into it. I don't want this to be a really long video. So one thing is price movement on the daily chart. Okay, so when I'm talking about price movement, I'm talking about a way in which you as a trader is going to be easier for you to predict where it's going and where it's coming from. Okay, so the simplest way that you can do that is by identifying the swing highs, swing lows, and where the imbalance is. Okay, so when price is moving, and then you have your swing low and your swing high like that on the daily chart. What price is going to do when it's making that pullback is going to rebalance those fair value gaps, those gaps that are left on the daily chart. Okay, so when price dips into those fair value gaps, what you notice is the target is going to be those swing highs if you are in a bullish daily market. So the reason this is very important for you as a trader is because when you have already taken a buy somewhere here, keep in mind, this is a daily chart. Okay, so whether you entered on the 5-minute chart, 1-minute chart, 15-minute chart, you have at least an oversight. Okay, you have a bigger picture of, you have an advantage, okay, of some sort, because you can hold a trade to all the way to that external range liquidity. Now I'll also talk about the 1-day daily bias that you also have to look at, because this is an overall daily chart that we are talking about. But you can also, even the daily bias, you can also narrow it down to just 24 hours. Okay, so we'll get to that. Just stick with me to the end. All right, so when price moves from that internal range liquidity, it has to go to external range. So the price movement is supposed to be internal range to external range, or external range to internal range. Okay, now when price takes out that external range, which is just going to be a swing high there, you have to identify where your fair value gap is lying. You might have a lot of fair value gaps. It doesn't matter. Okay, it doesn't matter. I can show you how which fair value gaps to prioritize. Okay, so when price takes out that external range liquidity, just wait for price to go back into internal range liquidity. Okay, so the reason this is also important, when price has gone all the way up and it has given you on the same daily chart, it has given you some sort of confirmation that it might go to the downside on the lower chart. This might also be your target. Okay, but if price already maybe price found you, maybe you're already down here, and then you found maybe a buy setup on the lower chart. The thing is, and also, by the way, you can see from this first one here, when price went down here, it just bounced into that and then went to the upside. It's not always good. The whole point of price going into fair value gaps is to rebalance that fair value gap. Okay, so this fair value gap is not, this imbalance is not completely rebalanced, it's not completely filled up, so price can still go back to that. Okay, you need price to completely fill up that imbalance. Okay, so this one is completely filled up. So when you have something on the lower time frame, that can be your extreme target profit on the external range liquidity there. All right, now When you are doing this is okay. Okay, this is just fine. You are just following price movement. Now there's going to be a time when price moves like this. Okay, you have your external range liquidity up there. This is where you need to be careful. Okay, of course, that is going to be your extreme take profit. I'm saying it again, this is a daily chart. So if you are going to hold all the way to that, this can even take you like 4 days or even the whole week for price to just, because there's going to be, these are daily candles I'm talking about here. Okay, so I'm not just talking about the people that like me, the scalpers. Okay, the day trader, the swing traders, the position traders can also get something from this. All right, there are people that hold trades for weeks. So yeah, okay, there's going to be a time where instead of price going all the way up, okay, so like I said, price can move from internal range to external range to internal range. Now price sometimes is going to do something like this. So this candle right here is very important. This is a daily candle. Now you can see it went up instead of closing above that swing high there. The full body candle closed below that swing high. This is called an inflection point. It's very important. Okay, inflection points can form on many POIs, okay, but on the daily chart, especially when you are looking at internal range to external range to internal range, this changes a lot. It's like it creates some sort of noise in your price movement. Okay, you know the normal price movement, but instead of price moving from external range to internal range, it moves from external range to external range here. So when this happens, you just have to know that price has changed direction. Okay, the overall direction on the overall daily chart has changed. Okay, what you need now is to look for where there is an imbalance. Okay, price needs to go back to its original price movement. So this is also called a turtle soup. Okay, so this, I've already put something like this in my full ICT SMC course, which is you can just check in the comments. So when you already have something like a fair value gap somewhere here, it's not completely filled up, you can now resume to the original price movement from internal to external range liquidity. Now we are going to the downside. So this is not the only thing that you need for you to really understand daily bias movement. Okay, so the other thing that you need to understand is this. Okay, so before I even go to the next one, if you are new to this channel, please consider subscribing, like this video, and leave a comment. Okay, also okay, there's a message for you here. I can just play a message for you here.
Want to pass your prop firm challenge fast? Get my full ICT SMC course built to get you funded in 3 weeks. And if you want live trades and daily setups, join my private Telegram group. Links are in the description. Let's get you funded.
Okay, so the next one, what you need is that one candle daily bias. Okay, now the one candle daily bias, even though it's called the one candle daily bias, you need these two candles for you to know what you are doing today. Okay, so you need the previous candle's high and the previous candle's low. This one is very, very straightforward. So when price goes to the upside like that, okay, and then closes above the previous candle's high with a full body candle, we are in a bullish scenario. So when price opens today, let's say this is Tuesday, this is Monday, okay, and then we are on Wednesday, meaning for you on Wednesday, price is going to open here, okay. This is where price is going to open. So let's just say Wednesday open, okay. What you are looking for now, when price opens here, you are waiting now for price to, this is what price does, okay. It's going to trade below. Since you are in a bullish market, what you want to do is to find buys below the opening price, okay. This is what you are trying to do. So if you find an entry setup on the lower time frame, just wait for the real chart examples. That's where I'm going to show you how to easily catch the, we've caught a lot of big moves in our signal group with my students. This week has been really, really big for many of a lot of my students. Yeah, so when price goes down there, this is where you want to catch these big moves below that opening price, okay. So when we go to the real chart, I'll even show you the targets that you need to be focusing on. All right, so that is a bullish scenario. Now when price just sweeps the previous candle's high and then the body closes below the previous candle's high, meaning on Wednesday now, remember we are saying this is Monday, this is Tuesday, now we are on Wednesday. So when price opens, shouldn't have removed that. So Wednesday, price open. So here what you are looking for, since now we are in a bearish scenario, price just swept the previous candle's high and then closed like that. So we are in a bearish scenario. So what you are looking for are sales. You have to sell above the open price, not below the open price, okay. Find your POIs above the open price. So it's going to look like this. If price up on the lower chart, this is how it's going to look like. Okay, when price opens and then goes to the upside, it doesn't necessarily have to take out Tuesday's high there, okay. It can just go up, okay, and then maybe you actually find a POI somewhere there, okay, and then you wait for price to just drop all the way to the downside, taking all the profits. That is simple. That can also be used vice versa, okay. If price closes below the previous candle's low with a full body candle, that's bearish, okay. If it closes, if it just goes down like this, okay, instead of closing down there, it just goes within the previous candle like that, then you are in a bullish scenario, okay. There's another scenario where price takes out both the high and the low are swept, and then price doesn't close, the body doesn't close above or below, it just closes like this. So this is where you consider the previous the previous price movement that I just showed you. That is going to show you the overall price movement, okay. So let's try to go to the real chart. I'm trying to show you the chart examples of big price movement that we've been catching this week in the signal group. Okay, let's
Want to pass your prop firm challenge fast? Get my full ICT SMC course built to get you funded in 3 weeks. And if you want live trades and daily setups, join my private Telegram group. Links are in the description. Let's get you funded.
Okay, so we are on the volatility 751s. This is a synthetic indices. Some synthetic indices traders were complaining that I want to talk about currencies. They felt left behind. Yeah, so we'll just use this chart because we caught some really big moves here. Okay, so I'm not going to analyze the whole chart. This is too big, but since we are talking about price movement and that one candle daily bias, I think I can just start from all the way down there, okay, to show you the price movement. So if you already know the price movement, you can easily draw, okay, how price was moving from this point to that point, from this point to that point, from this point to that point. But I won't do that. I want to show you clearly how to analyze. Okay, so since we are starting from down here, there was also an inflection point down there, so we'll just mark that swing high. That swing high is going to be external range liquidity. Okay, so that external range liquidity was taken out. Sorry guys, I'm trying to move as fast as I don't want this to be it's already long anyway. So yeah, from that external range liquidity, you have price going up and then going back into that fair value gap, which is internal range liquidity. Okay, from internal range liquidity, you expect price to go to where? External range liquidity, which is that swing high. Okay, from that swing high, price has to move to internal range liquidity, which is this fair value gap down here. Okay, and then from internal range liquidity, you go to that swing high, just like that. These are easy things, guys. In my signal group, even before we take a certain trade, some students which are just new entrants, at least they're able to analyze a trade before we even take any trade, which is a good thing. Yeah, so from external range liquidity there, you have these inside candles there. Price continues going to the upside. So guys, pay attention here. When you see price going like that, instead of just going straight strongly to the upside, it keeps coming back. It's just leaving wicks above, just leaving wicks above. You have to pay attention to your environment. Okay, look to your left. Can you see anything to your left? Because price already reacted to external range liquidity, so you might have a fair value gap up there, which is going to be internal range liquidity, this fair value gap right there. Okay, so this is going to be your internal range liquidity. All right, so price was just testing that in internal range liquidity. If you are not playing around to your surroundings, you are going to just miss it. So from internal range liquidity, we go straight to external range. Where is our external range? Swing low is all the way down here. Okay, just like that. You can try to practice this on your own. The reason I like this external range liquidity, it had these equal lows here. This is a big liquidity pool. This is why you had a huge black candle here. Okay, from external range liquidity, you are now looking for internal range liquidity. Okay, price was left a fair value gap here. This is an inside candle. It's inside this big candle, so the one you are counting is this one. Okay, so this between between that low and that high, that is where the fair value gap is. Okay, but price did not go back to that fair value gap. It continued going to the downside. So what you need to do is just wait here. Okay, you just keep on waiting. You have another inside candle, and then you have a new candle here. Okay, so between that high and that low, like I said, it doesn't matter how small the internal range liquidity is going to be, just mark it. Okay, so from external range, we can now count this as price going back into internal range liquidity there. All right, so after that, what are you expecting? For price to now go back to external range, which is down here. Okay, from there, where is price supposed to go to? Internal range liquidity. Like I said again, pay attention to your surroundings. Okay, price did not just react to the downside here and then continue going to the upside. No, what you have down here is internal range liquidity. So like I said, price is supposed to rebalance those imbalances that were left, but here price just dropped here. It did not fill the whole imbalance here. Okay, so you still have this imbalance left. Okay, you still have this imbalance left, and as you can see, price just came down to fill out the whole thing, okay, to close the whole gap and then continue going to the upside. So price here moved from external to internal range. So from internal range here, price is supposed to go to external range. And where is our external range? This is our external range right here. Okay, so from external range there, price has to go back to internal range. Price had to drop all the way down. Okay, like I said, as long as the candles are not overlapping, please consider them as imbalance right there. Okay, it's a small imbalance, but an imbalance is an imbalance. Price took out that imbalance, meaning now price is supposed to go where? External range liquidity. So this is our internal range. Our external range is all the way up there. Okay, okay, so after price takes out external range liquidity, we have to go back into internal range liquidity. I'm sorry if I'm moving too fast, but yeah, I don't want this to be that it's already too long. Okay, when price left this fair value gap here, okay, it dropped back into that fair value gap, and where did it go? To our external range liquidity there. That's our external range. All right, now this point is very important. This is an inflection point right here. We have external range liquidity there, and then as you can see, price moved to external range again because we have a swing low down here. Okay, we have this swing low down here, so it moved from external range to external range. This is an inflection point. Okay, so inflection point, like I said, from our first thing that I said you need to identify, which is price movement. I said you are going to encounter inflection points where price, instead of taking out, so we had that swing high there. Let me make this different. Okay, so this is going to be a turtle soup now. Okay, let me just make it black. All right, so that swing high there, price just went up. Instead of closing above, it started with this candle. Price just swept that swing high's liquidity, dropped, and then we had this liquidity run here. Okay, swept that. Instead of closing above, it just dropped again. Okay, that is an inflection point. So when you see this, price may take out external range liquidity and then go straight to external range liquidity again, the downside, it means price has changed, okay, that direction in terms of bias. All right, so now from external range liquidity, we are now looking for internal range. I hope this is making sense to you. So from that external range, we have internal range liquidity right here. Okay, we have internal range right here. Okay, you can see when price dropped, it went into internal range. Okay, it did not take out that low there. This low was taken out right here, so that is external range. This is our low. There was plenty of liquidity down here. External range liquidity taken out. Now if you pay attention, this is not completely filled. You can still see a space above that high there. That is still internal range liquidity. So when external range liquidity was taken out here, you can do this. Okay, you can see price had to go back into that internal range to take out the external range down here. To take out your external range all the way down here. Okay, so price took out external range and then went back into internal range because it's not completely filled up. Okay, after that, instead of price just going straight to that major external range, you can see when price went up, it did what? It made a pullback. So this right here counts as external range liquidity. Okay, this right here counts as external range liquidity because price did not just go straight into internal range. Okay, so when this pullback was made, it counts as external range liquidity, which was swept, and then price continued going to the upside again to internal range liquidity. This is not completely closed up. As you can see, there's still this space right here. There's two things here. Okay, you can still see that space down there. So when this is completely closed up now by this price movement here, when it's completely closed up, now it goes for the major swing low down there. Okay, I hope you are not lost here. If you are lost, I show there's an SFC ICT full course that you can get, or you can just join our group. You chat with your fellow traders. We make money together. There's a lot of money to be made, guys. Okay, that external range liquidity taken out, where is your next step? Internal range. Okay, internal range has been left here. Just hold on until the end. I want to show you how you, because even when you have these biases, you still need to take your trades on the lower time frame. Okay, so just stick around until the end. Okay, price took out external range and then went up. Okay, went right into internal range liquidity. Pay attention again on this. Okay, this is very important also. So price dropped from internal range, that is completely filled up. That internal range is completely filled up. It went back into external range liquidity. Look at the way external range liquidity is being taken out here with wicks. Okay, so these are turtle soups, guys. Okay, so this high and that high makes a double top. So already, let me just take this. On our chart, the signal group, we've already kept this as it's going to be very useful in the future when price comes back, because this is a really nice liquidity pool. Okay, this double top right here, this is a nice liquidity pool. Okay, it has been left there for a reason. Yeah, so price made this pullback and then went to the downside. I was really hoping it just goes all the way into that other fair value gap, because it was going to be a really huge drop, but yeah, we still caught like really huge moves here. Okay, so down here, what am I going to use? Down here, there's a turtle soup that is happening. There's some sort of inflection point that is it's like price is just trying to take out the sell side liquidity down here. Okay, just like that. But what I want to show you now, I want to show you how, by the way, if someone is wondering, there's nothing here. Okay, there's nothing here. So the reason we are trying to consider this as an inflection point and why it will be easy for it to move, it's because we don't have internal range liquidity down here. So that's why it might be easy for price to just go all the way to the upside. That's why it's doing these turtle soups here. Okay, now I want to show you the trades, or just a trade that, okay, we can even show two trades or something. Now this is where you can use the one candle daily bias strategy, the one that we showed in the next, in slide 2, I think. Yeah, okay, so this can, let's start from here. This really big candle here. Okay, so we have this candle drop into the downside. Okay, and then you have this second one. Now when you look at this big guy, it took out the previous candle's low and then closed just like that. Okay, and then you have this inside candle. It's an inside candle, but when it opened up there, and then dropped like that, this was on 28th April, and then you have this new candle. This is the one that finished. So the reason I'm trying to show you this is because, of course, this is going to show you what's going to happen like in the next 24 hours. It's giving you an expectation, a projection, something that you need to expect price to do and where it's supposed to reach to. So just because price, this candle right here is showing bullish bias. Okay, it's showing bullish bias, but then you have this next candle, which was these are daily candles, okay, which is an inside candle. Now if this is showing a bullish bias, meaning when this opened you are just looking for buys, and your extreme target is going to be that high right there. Okay, that high right there, the one that was pierced through on another day, not this day. So if you actually found an entry setup during this day, your target can be hit the following day. That's what I'm saying. Okay, now down here you can see when price took out that candle's high and then closed like that. Okay, this is showing bearish bias. Now you have to pay attention here. Remember that inflection point I was talking about. That high, so you have that high and then you have that low there. That high is a swing high, that is a swing low. All right, so when you have price coming down like this, okay, so first of all, with this candle taking out the previous candle's high there and then closing like that, it's showing bearish bias. Okay, so if you entered on this candle, okay, if you sold and then went all the way down there, you could have made like a lot of profit. But what I want you to really pay attention to is what happened down here, because this is very important. You see this swing low here, and then price comes, instead of closing below that, it just closes above it. The body closes above it. That is a turtle soup. Okay, so you can see this candle closing below this candle here. Okay, if I just put a line there, you can clearly see. Come on, you can clearly see here. It closed below this previous candle's low. Okay, but this is not a bearish bias. Okay, this is where inflection points come in. Okay, so for a turtle soup, this is what happens now. This is what happens when you already have a swing low taken out, and then for you are here. This is where you are. Okay, this is 1st May. This is 30th April. 1st May, you are not trying to sell. Okay, the swing low has been taken out, but price did not close below that. You have to pay attention to that. Okay, so here you are buying. Now, when you go down to the lower time frame, let's see if we can go all the way back to 1st May. Okay, let me just put a line there. That's 1st May. And then price opened. Where did price open? Okay. Oh, price opened here. Okay. So where price opened. So we'll go to 1st May, the opening price. So if you are buying, you have to buy below the opening price. So if we go to 15 minutes, go to 15 minutes. I don't know if we can go all the way down to 1 minute, but we'll see. Okay, so 15 minutes. So this was a really interesting trade. So like I said, buy below the opening price. Buy below the opening price. Okay, so you can see this is where price opened. Okay, this is 1st May right here. Okay, so price opens, you have to buy below the opening price. So what do? You wait for price to give you a POI, a point of interest on the 15-minute chart. You can see there's a point of interest here, and price respected this point of interest. But if you are going to use this point of interest for your entry, there's something wrong with you. Okay, price respected that point of interest, but I did not use this point of interest because this is why you need that ICT SMC full course, because even without that full course, at least you've watched some of my videos, or you've watched some videos where you don't want to be taking trades where you have this sell side liquidity here. These are double bottoms here. Okay, you have to wait for this to be taken out so that you can easily get those buys. Okay, this is sell side liquidity. Okay, this is sell side liquidity, double bottoms. There's no way I was going to take that buy there. Okay, it just didn't feel right. So when you go, this is on 1st May. Okay, this is all 1st May. So right here, this is where things made more sense. Okay, after taking out all this liquidity here, after taking out all this sell side liquidity, you have an order block down here. Okay, just there. Now you can go down to the lower time frame. Okay, you can see why it was easy for price to just continue dropping like a free fall, because of this sell side liquidity here. So now when you go down to the lower time frame, which is 1 minute, I hope I can go all the way back on 1 minute. Let's see. I don't think so. Okay, we'll try 2 minutes. 2 minutes. There isn't much difference. Okay. All right, so when you go down to 2 minutes, this is what you are going to get. Okay. Yeah, the difference is not that much. Okay. First of all, price made a swing high, made a swing low, and then went up. This is feather swing. Okay, all of this is covered. Sometimes I just talk about it in the signal group, but yeah, so when price went up, made a swing high, went down, made a swing low, that's a feather swing, went up again, this right here is going to be your inducement. Okay, that pullback right there. So the reason we are considering this as inducement is because I'm sure someone is already asking, why is in this inducement? You don't have anything anything down there. You don't have any point of interest where price can react to. Here you have fair value gaps. Okay, so even when you are trying to look for a point of interest, you can just use this Fibonacci from that high, from that low to that high, and then below the 50% level, the equilibrium, this right here, your first order block, this is going to be your point of interest. Okay, that guy is going to be your point of interest. So we didn't even get I mean, it was a good entry, though I didn't like the stop loss was a bit big, but it was fine at the end of the day anyway. Yeah, so when it comes to take profits, first of all, when this swing high is taken out, most of the time what I advise is you can move this stop loss to where the order block is, but in this case it was not moved. Okay, it was not moved. I like moving my stop loss to below a certain area when there's a breaker block or a mitigation block. Here, there was nothing. A mitigation block that I'm talking about is the one that almost has it's in the same range as the fair value gap. Here there's a fair value gap, but this candle is just way too big. It covers a lot more candles, so no. Yeah. So on the on the 15-minute chart, the 15-minute chart right here, okay. So a lot of profits were taken off right here. Okay, so this entry was on 1st May, but most profits started being taken off on 2nd May. Now, when you go to, because the daily has the ultimate take profit, okay, majority of the profits were off here. Now, we are still considering this candle right here. This is the candle we are considering. This is the one that gave us the bullish bias. Okay, so right here, this is where this was the final take profit right here. Okay, remember the majority of the profits were taken off right here, but the remaining for students who were still holding trades, this is where it ended. Okay, it was not a long, it wasn't really that long. Yeah, but on the 3rd, okay, let's move now. Let's delete this. So that was a buy. I just want to show you a buy and a sell. So since we already had a sale on the 4th of May right here. So first of all, we have this candle here. Okay, this is the 2nd May candle. It took out the high and then closed like that. So that is a bearish bias. Okay, that is a bearish bias. So let me just show you what happened on 4th May. This video is already too long. So okay. So on 4th May, this is what happened. There was a really simple trade. 4th May, 4th May, come on. Okay. Remember, if you are buying, you buy below the opening price of the daily candle. Okay. If you are selling, you sell above the opening price of the daily candle. Now, the reason this was a really simple trade and the reason it was so easy to hold is because of this. Okay. So first of all, to start with, price took out a lot of liquidity when it was going up. Okay, there was this engineered liquidity right here, double tops. Okay, you can see that price is trying to push to the upside just like that, and even when it pushed to the upside, there was this Judas swing right here. You have that high, and then price just took out that high, swept it, and price dropped to the downside. Now, after dropping to the downside, this is like a market structure shift. Okay, what was left above there was this single candle order block. Okay, sorry, now it's a long video now. I can't explain these things within 20 minutes. Yeah. Okay, when you go down now to the lower time frame, 1 minute, here 1 minute can be used now. Yeah, this is recent. What you are looking for is for price to go back into that single candle order block, and then give you an entry setup. That's what you are looking for. That's all you are looking for. So you can see, first of all, before I even go to the entry setup above there, this should even make you happy. When you see a liquidity pool like this needs to be making you happy. For some of you who still don't understand liquidity pools, I'm just talking about a consolidation area. When price is already in a point of interest on the higher time frame, and then there's this consolidation, wait for this to be cleared. In short, you are just waiting for price to take out that buy side liquidity there. Okay, so this buy side liquidity, when it's taken out, these are equal highs. So that is buy side liquidity. So when that is taken out, you are now waiting for price to give you that entry setup. And this entry setup, the way it came with that turtle soup again, right there. I just zoom in, you can see price swept the high and then dropped. So in this case, you don't even need inducement. Okay, you just need price to go back into your point of interest. So here, as you can see, there's that market structure shift. I even forgot to mark the market structure shift in our previous example. Okay, so from that high to the low, we are using fibs. Where is our first order block? This is our first order block. You have a fair value gap there. This is our first order block. The internet is messing me up. Okay. Now here, at least you even have a what? A breaker block right here. Okay. So you have that order block and you also have a breaker block. So let me just say order block plus breaker block. But even here, when you enter into that order block, stop loss above that high. Okay, here stop loss was moved to just above this breaker block when price broke this low right here. Okay, convincingly. Not price is not supposed to break that low and then like just with wicks, because if it goes with just wicks, it's easy for it to reverse and then maybe give you another setup or something. But if it breaks down there convincingly, then yeah, you can just hold it. Yeah, now here you have first you have this low here. This is on the 1 minute chart. Okay, that low right there, it was giving a 1:8 risk to reward ratio. But when you go when you go now to our main goal, because here we are just, so the reason I'm trying to give my students like these big wins is because there's going to be, I mean, of course, we have lost some trades where maybe you just lose like 10 pips, and then you end up catching way more. Okay, so there's this low right here. Okay, I want to show you the ultimate take profits. Okay, now, okay, so this candle right here, this was the ultimate target. Okay, right here, so it's the ultimate target. Now the funny thing is, some of my students, some are still holding because they want price to take out this low. I don't know if it's going to do that, but yeah, for me right now, I want to see how 5th May is going to close. Okay, so the reason this was the ultimate target, it's because first of all, this is an inside candle. Okay, so this candle is the one that gave us the bearish bias, so we follow it for the final target. Okay, this is not a bad trade at all. Even if you lost like 10 trades in a row, you can still make it back just in one trade, as long as you are keeping to your risk management. Okay, 1 to 33, some of you who know your math, if you know your math, you know you can lose even 20, which is, I mean, even losing 5 in a row, it's basically impossible at this point. Yeah, otherwise, if you still want to join the Signal group or the VIP mentorship group, or you just want to get the full ICT SMC full course, I'll just put the link down below. It's just for WhatsApp and Telegram. Okay, I don't have a free Telegram channel. All right, if you see any Telegram channel, free Telegram channel that is not, please, you can just report it. That's going to be very helpful. Actually, you can just report it. I think you can do that on Telegram. Yeah, so thank you for watching, guys. See you in the next video.